What is a liquidation preference? A liquidation preference is generally a right granted to preferred shareholders, that is, owners or holders of preferred shares in a company, that entitles that holder to a preference in payment at any point in time that the company is liquidated. So, if the company sells a substantial portion of ownership interest, that it authorizes new shares, or it recalls existing shares and sells those as part of an IPO or direct public offering, then the investor who invested money in the company will have preference in repayment of their ownership interest or the amount of money that they put in. So let me give you an example of how that works. So I invest in a company and I put $100 in the company. If at a later point the company is sold or it goes public and there's a cashing out, that is ultimately a liquidation of the company is being sold. So the board of directors have reclaimed and sold all the interest of the company, and now there's $1,000 to be distributed. Well, my liquidation preference might say that I get paid or returned my $100 investment before others get paid. So I will get my $100 first, and then there will be $900 left over to be distributed to everyone else. Now, I've only gotten my money back at this point, so generally I will receive a liquidation preference that is 1 or 2 or 3 times my initial investment. So if I have a liquidation preference of 3, then I put in $100, the company sold for $1,000, I will get $300 before anyone else gets any money. Now, so this is what a liquidation preference is. I get paid first. Now, if you pair this with participation rights, after I get my $300, perhaps I have a 10% participation rate, meaning that as you distribute the remaining proceeds, the additional $700 that was collected to owners, well, I get 10% of that. Now, oftentimes there is a catch-up period, so other investors who have put in money as well, they get a return of their money equal to their initial investment first, and then I participate equally in the distributions after that. So a liquidation preference paired with participation rights is extremely common in startup financing, where an investor requires preferred convertible participating shares with a liquidation preference and participation rights. So this is generally how that works and what that phrase means.